ask. Today, I'm going to make it a little bit shorter when it comes to fundamentals. So we're going to kind of keep the focus on the economic calendar. But when we're looking at macro fundamentals, just like a quick review of what we have coming up pretty soon, is this one is all pretty much about interest rates. Last week, we had interest rates coming out from the Eurozone. Next week, we have interest rates coming out from the US. And then the following week, we have interest rates coming out from the UK. So next week, it's going to be on Wednesday from the US, and then you also have Japan's interest rates coming out. Or actually, next week also we have interest rates from the UK coming out. So 3 major banks, US, Bank of Japan, and then also Bank of England posting their interest rates with monetary policies. So next week's going to be quite heavy when it comes to fundamentals and when it comes to market sentiment, essentially. This week also we have a lot of good fundamentals coming out. So we started off quite easy. For example, this week, as on Sunday, as you guys can see, we had GDP data coming out. It's still better than the previous. The previous was sitting at negative 0.6%. We were expecting an increase of 0.3, but we only ended up getting 0.2. But when you look at the previous and the actual, those are the 2 data points that actually matter. We did get a pretty good increase, right? So when you look at the history, we're getting a pretty good fluctuation. We had 2 months where we had back-to-back negative. We bounced back up to 0.5%, and then we dropped back down to 0.6%, and then which was better than what they were forecasting. But now it seems like we're bouncing back up to 0.2%. So a lot of fluctuations, pretty much that's happening in the economy, right? And then when we went into London session, not too much coming out, or even in New York session today as well. There's not a lot coming out in Asian session in general, but in pre-New York or pre-London sessions, things start to pick up a little bit. So with GBP data, you got average earnings coming out, you have the unemployment rate coming out, you have the claimant count change coming out. So this is going to be very important if you're going into London session and you're trading any GBP pairs. It is low impact news. So again, it's not going to create a lot of volatility onto the charts in, in pre-London session or even right when the market opens up. But you could expect a little bit of volatility on the 15-minute time frame, on the 30-minute time frame. But other than that, really not much, unless we really miss the numbers or there's a massive increase, compared to what was the previous and what we're expecting. Now, continuing into Tuesday, tomorrow we are going to have our live session for CPI at 4:30 a.m. PST, so an hour before CPI data comes out. In London session, you don't have a lot coming out, and this is really going to be like the data that's going to kick off the week, where you have CPI data coming out from the US, and then you have your core CPI. So this includes, energy prices and all of that, but the core CPI excludes food and energy. So as we know from a macro fundamental perspective, we have been seeing how energy prices have been the outliers and really skewing the data in general. And because of that, we've been seeing high inflation. But if we end up getting lower number compared to the previous and compared to what we are forecasting, then that's essentially going to be a good thing. And that is something that the Fed is going to take into account, because if CPI starts to decrease, that means that inflation and price pressures on consumers is starting to decrease, right? Which is a good thing. So that means that the Fed won't have to be as aggressive as it was expecting to be, or that it has been since the beginning of the year with those massive interest rate hikes. So maybe instead of seeing a 75 basis point hike, we could essentially see like a quarter basis point hike, right? Or like a half basis point hike, things like that. And then going into pre-London session on Tuesday, you got CPI data coming out from the pound, and then you also have PPI coming out and RPI. So this is inflation from all 3 different perspectives of the economy: the retail side, the producer side, and the consumer side. Same thing here, where CPI kind of takes into account food and energy, but core CPI excludes food, energy, alcohol, and tobacco items, which tend to be the outliers when it comes to the pound that tend to skew the data. When you're looking at PPI input and output, the way to understand this is this is the change in the price of goods and raw materials purchased by manufacturers. So this is things that you would have to purchase. For example, let's say if you want to make a water bottle, right? Or if you want to make any other different product, what do you need? The raw materials that you need to produce that specific product. And then the output includes the entire process. So the input plus, you know, the labor plus the machinery plus everything else in the entire process, how much did it cost you? And that's the total price. So changing the price of goods and goods sold by manufacturers, that gets passed down to the retail side. If the retail side has to pay a lot for, you know, that product from the producers, then obviously they're going to pass those costs down to the consumers. So really, this is the start of the cycle. If you start to see that the numbers here are increasing, then understand that those numbers or those prices are going to get passed to the consumers within the next month, 2 months, 3 months, you know, in the coming future, pretty much. But if you start to see things slowing down here, for example, PPI output, where we're expecting a decrease of 0.6% from that 1.6 to just a 1%. This is a good thing because that means that there's less price pressure on the producers, and that means there's going to be less price pressure on the retail side, and then that's going to translate onto the consumer side. And then as you continue down onto Wednesday, you got a lot of red folder data here pretty much where you have PPI coming out now from the US. So again, that's going to be a very important data point. And then you have GDP data coming out from New Zealand dollar and Asian session. And then you have some unemployment change and unemployment rate coming out from the Australian dollar. And then going into Thursday, again, US session, you're going to have pretty good movements pretty much in US session this week, where you have core retail sales coming out, and then you also have retail sales coming out from the US. So those are going to be some of the data points that we're going to be trading. And then as you continue down, everything else is kind of yellow folders, and then going into consumer sentiment. So all of this data this week is pretty much going to be very important in order to understand, you know, where is our economy sitting at and what kind of interest rate hikes can we expect going into next week. Today or this week is all going to be about that economic data, setting up that picture of the economy, where are we sitting at right now as an economy, and then that leads into that market sentiment that's going to be leading to those interest rate news from Bank of Japan, from the US, and from Bank of England next week. From a macro perspective, right now, the market so far, I know that we are in some headlines, we are seeing some updates about, you know, Russia or Ukraine. For the most part, the markets have already priced in, you know, the Russia-Ukraine war. And then you still have that, what we have discussed, you know, multiple times in the previous weekly outlooks, the Taiwan, China, and US. And those geopolitical tensions, we haven't seen much progress from there just yet, or like, you know, any new updates from there just yet. But right now, it seems like all the attention is pretty much on these interest rate hikes from the UK and from the US. Bank of Japan, you can already kind of, know and predict what they're going to be saying. They're going to be maintaining those negative interest rates. They have said that they're not going to increase interest rates or change their monetary policies from accommodative policies to contractionary policies just yet. They're still maintaining their accommodative policies, which essentially just means that they're continuing supply and keeping their expansion of money supply in the economy. So that's from a macro perspective. Really, the attention this week and this month overall is just on those interest rates and what can we expect to see. Any questions on the fundamentals before we go ahead and move on?
No.
Okay, awesome. Let's go ahead and move on to the technical side then. Let's start off with GJ first. So I want to start off with the quarterly time frame. If you don't have the quarterly time frame, it's okay. You know, don't panic or anything like that. This is a reason why I'm going over the quarterly time frame so you can still see it. So based off the quarterly time frame, as you guys can see, you know, still in a very bearish trend. Even if you look at the very recent years from like 2007, 2008, in a very bearish trend here overall. And also what I'm going to do here is annotate. So as you can see, we're pretty much sitting at very key levels, right? Where price is creating these higher lows on these higher time frames. So we're sitting at a pretty key level right now, which makes sense. Even from a fundamental perspective, we're seeing like, you know, a lot of back and forth happening. We just had like, you know, a lot of election news coming out from the UK. So there was just a ton happening from a fundamental perspective. Now we're sitting at some of these key areas, and this is where we want to be very, very careful, right? So one thing that I'm going to mark off here off the quarterly time frame is going to be the current resistance. So this little wick that price has already made, I'm just going to mark that off. And then if we can continue breaking above this, then we'll come back up and target into this resistance zone right here. That's only if price can continue breaking above, let's say this 167, 100 area. And we will adjust these levels as we drop down to lower time frames, but as of right now, that's what we're kind of targeting. The next area that I'm going to mark off here is going to be this wick low right here of the current quarterly candle. Again, we will adjust this as we drop down to lower time frames. And I'm just going to mark this off as 159.300. When we drop down to lower time frames, we're going to mark off pretty much what are some key areas that we can take advantage of right now. So like I said, if price breaks above that 167,100 area, then we can look for those potential buy opportunities. So just to remove some confusion, I'm going to remove that zone. As of right now, as you can see, we are sitting in this consolidation. Once again, you are in this bearish trend. Price is pushing down and you are sitting at some of these key areas, right? So I would say like right around here, you are sitting at some of these key areas where we tried to break out of it, but we failed to do that. We came back and we're closing into this monthly consolidation area. Since price is consolidating on a monthly time frame, we also know that there's going to be a ton of volume once it does break out of it. You have a ton of examples of that, right? For example, price kind of consolidated out here, grabs that liquidity, and then we essentially come back, push up to create new highs. And then we come right back down around this area, we consolidate a little bit, and then we get a massive sell-off coming right back down into some of these lows. So you have a ton of examples that you can look at. And here is the same exact thing. For us to look for any buy opportunities, let's say here, I would want to see price pushing up and closing above this 167,100 area and then continuing bullish from there. Another key thing to note is that this is the last month. When you go into this quarterly time frame, this is the last month of the current quarter. And then next month, you're going to have a new quarter forming. So, obviously give price enough room to make those wick rejections, to give the next candle to make any top and bottom wick rejections and kind of find its direction from there. So as of right now, what I'm going to do is again mark off a zone. So this is this resistance zone that we're sitting in at the moment that price keeps tapping into. If and only if we can close above this, then I would be looking to entertain some buy opportunities, essentially coming back and tapping into this little consolidation resistance. And we'll call that the 174.4 area. And then, you got a good enough range here that you can look for potential buy opportunities around 700 pips, right? So absolutely, you can take advantage of a lot of scalps that can turn into swing trades. But if price just rejects this and comes right back down, then I'm not really looking for any sells unless price can continue breaking below this area right here specifically. Anything in between, as you can see, the candle closed bullish right there after creating, coming back and retesting these highs and creating a top wick. The following candle took us right back down after a top wick. So that tells me as we drop down to lower time frames, we will probably see some consolidation here. And so that's why what I'm doing right off the bat here is just narrowing in my zone. If price comes back and breaks below the zone, then I'm going to look for a sell coming right back down and ultimately targeting this 160 area flat. When we come on to the weekly time frame, so same thing here where we've had this massive push up, right? We're still in this bullish structure. So what I want to see is, can we continue bullish from here and essentially this week maybe close above the zone and then next week make a bottom wick and continue pushing back up? If that happens, then we have some buy opportunities. Here, as you can see already, a lot of wick rejection. So this is why I don't want to be trading in this range here. We've already had a little bit of a gap up this week. We've made that bottom wick flip back up. And so what I want to see is, can we come back and close below this somewhat of a resistance area and then mimic this entire, bullish pressure that we've had, mimic that, correct that, and come back down into some of these potential support areas first, and then target 159, 300 or 160 area flat. Let's go ahead and drop down to the daily time frame. So on the daily time frame, you have the same exact thing where you have a lot of consolidation fake outs and stuff like that happening in this area. I don't want to be looking for any trade opportunities here just yet. So what I'm going to personally do is just stay out of GJ this week until we see clean moves here. If you're really looking for scalp opportunities, then what I'm going to do is actually adjust this area and tighten it up a little bit. So what I'm doing is tightening it up to the current resistance that price is making. If price can continue to break its own low, so there's going to be a lot of zones that are pretty much going to be made here. So let me tighten this up here a little bit too, so it doesn't look too messy. So you got this entire zone, which is that break and retest support. Price pushes back up, break and retest resistance, comes right back down, and then you get a lot of like exhaustive moves happening here. So if I'm going to look for any sell opportunities, what I want price to do is continue breaking below its own low, which is this little bit of a bottom wick that price is making. If you want, you can adjust it down a little bit more right on top of these wick rejections. So if price can continue breaking its own low, that shows me that there is bearish volume in the market, and you can look for those potential sell opportunities, let's say below this 166.4 area, coming back down, and you're looking for those quick scalps if that's where you're looking to trade. And absolutely, you can take advantage of this, maybe going into the employment data that we're about to get out of UK. Here on the 4-hour, you can see a ton of consolidation. So again, if price breaks out of consolidation, you got that entire sell to take advantage of. When you drop down to the hourly time frame, same thing, a ton of consolidation, and then you got those sells that you can take advantage of. Or if price bounces off this area, really closing above that 167-100 area is going to give you the confirmation for potential buy opportunities. As you can see, this zone right here is very, very significant as price is bouncing off of it. And then we had a huge rally from here. So what I want to see here, if I were to draw out any candles for you guys, was, for example, price bouncing up, and then essentially it comes up and closing bullish above this. The next candle, the most preferred setup would be a proper break and retest. So that means that the next candle closes bearish, holding onto this area support and then continuing back up from there. But if you get a lot of fundamentals, for example, you get, we beat the range and it's optimism pretty much in the market, you got pretty much good fundamentals coming out, then the next setup that you can see is an impulsive move. In a setup like this, where this candle has closed bullish, the next one gave you a bottom wick, essentially holding onto this area support, and then breaking previous highs and continuing back up bullish, that could be a nice scalp opportunity. Place your stop losses, below this zone, or however you want to adjust it according to your risk. And that could be a nice scalp opportunity. Obviously, look to the left and see if you have any minor support or resistance areas that you can target as potential partials. Any questions so far? All of this makes sense?
Yes, makes sense.
Perfect. So now we're going to go ahead and drop down to gold. Do the same thing. Let's go onto this quarterly time frame. Let's see what we have going on here. It looks quite similar to what we've had previously here, right? Right into these areas, you have a little bit of a consolidation pretty much going on, and that's what we've been having since 2020, where price tapped into its all-time highs. We try to come back and revisit when the Russia-Ukraine war news started to come out. We started to price in all of that. Then we started getting news about interest rate hikes and the Fed increasing interest rates, and we did get those interest rate hikes pretty much coming back down and revisiting into these previous lows. It seems like we're kind of bouncing off of that. So what I want to see is, to end off the year, can we essentially see this bounce off, this little bit of a consolidation, and then going into next year, maybe even second quarter or third quarter of next year, get enough fundamentals to continue pushing right back down, right? That's essentially what I'm interested in seeing. But again, that depends on the path of the economy, like they have said multiple times. So what I'm going to do is mark off that 1680 mark, where price has tapped into several times. And then also mark off this resistance right here, which is at 1775. And then let's just do 1900 flat right into these areas down here, which is previous rejection. Price tried to break above that, failed to do that, came right back down. Those are the 3 levels I'm going to mark off the quarterly. And again, if you don't have the quarterly, it's okay. This is why I'm showing you guys the quarterly. When you come down to the monthly time frame, we can see how price is pretty much rejecting into 1680, comes back and closes right above this area, and then it seems to push right back up. Last monthly candle, as you can see, it had a ton of bearish volume, definitely, because it closed at the low of its own range, but it failed to break the previous lows or even come back and fill the wick. That's what we tried doing this month with this little bit of a bottom wick and flip right back up. So what I want to see is, can we see another boost up like we have right here in this candle here, for example, pushing right back up into 1775. That would be one trade that I would take advantage of. And then after that, as price continues pushing back up, I want to see if price can continue breaking into this around 1800 mark. or 1820. And when you look at 1820, which is this level right here, that resistance, and then you also had all this consolidation, and that acted as the consolidation resistance. So I want to see if price can come back into this area. The most ideal setup here would be to see potential break and retest forming on the weekly timeframes and even on the daily timeframes. So last week we closed bullish, coming right back up, leaving a range. This week we made a little bit of a bottom wick rejection, respecting the previous candle's low right here, pushed back up, broke the highs. So that tells me that there is definitely still a lot of bullish volume that we need to take advantage of and that we can take advantage of. So what I want to see is going into tomorrow with CPI data coming out, for example, if that eases up a little bit, or if we start to see, CPI coming out at a much higher level than we're expecting, then we could probably see gold pushing right back up, right? And even the anticipation leading up to interest rate hikes could push us right back up until interest rates actually come out and we start to see, is it an aggressive approach, or are we starting to see the approach starting to calm down a little bit? Maybe instead of doing the 75 basis point hike again, we come right back down to half basis point hike or even a quarter basis point hike. I think a lot of this movement is going to be based off of the market sentiment leading up to a lot of this news release. Make sense?
Yes.
Perfect. So now here, what we're looking into is narrowing in our zone even more. So what is essentially our no trade range and what are we okay to trade in? So what I'm going to do is mark off these lows right here. When you look to the left, as price pushes right back down, and then you got a little bit of resistance, and all of this, as you can see, it's all consolidation. But once price does break out of it, it's pretty much a straight shot going into 1775 and even 1800. Overall, the structure here is still bearish, so we want to keep that in mind because that's what price has done previously as well, right? Where we've had those all-time high levels being tapped into in 2020, and then after that we maintained this nice bearish structure. We came back down into the 1680 mark, grabbed enough liquidity to continue pushing back up. You had some consolidation. Once price broke out of it, there was a retest and then another nice push back up into 1900, which we have already identified many times as an area of liquidity. After that, you come back down, and then same thing, you tap right into 1680, grabbing a volume, coming right back up into 1820 areas. And that's pretty much where we end up consolidating out for majority of 2021 until we get that Russia-Ukraine news, come back up, revisit those highs. And then now we have started that bearish trend here again. So what I want to see is if price breaks above, let's say the 17, I would say 30 area, not 27, but 1730 area, can we get a nice retest and then a continuation back up? That would be the ideal setup that I would want to trade. It has been the same thing here where, yes, it was a little bit of consolidation. Price pulled back, ended up holding onto a support and then pushed back up from here, straight shot going up into 1775. So that's something similar that I want to take advantage of here as well. And for that to happen, again, we would want to see some break and retest above the 1730 area. Any questions? So what I'm actually going to do is just for my own purposes as well, going into tomorrow, I'm actually going to mark this off as yellow because this is an area of interest for me. So I want to see a nice break and retest here, and then a continuation up if we are to look for any buy opportunities. For any sells, I want price to break below 1700 again, and then look for those sells coming right back down. Anything in between, again, you could take advantage of scalps. I'm personally staying out of this because it's a lot of consolidation. So when we come onto the 4-hour time frame, as you can see, a ton of consolidation here. So there are trade opportunities that you can take advantage of 100%. The way that you would do that is, as you can see right now, the current 4-hour candle just started forming about 30 minutes ago. And so what I want to see is price breaking its own low, breaking the previous candle's low as well, and then continuing back down bearish. You can take advantage of price as it's pushing down below this 1720 area, and then coming back down into the support of 1713, 1712, and then coming back down into 1708. This could be a nice sell opportunity, but as you can see, price is holding onto a nice bullish structure here as well. It's intraday time frame structure, just 4-hour time frame, but still it is showing you the promise of pushing right back up. So that's why I say wait for 1720 to break, and then you can look for yourself. Take some partials around here, take some partials around here as well, and see like how long you can let your trade run. But for any buy opportunities, I do want to see price holding onto this area as support. Definitely could make a bottom wick rejection and then push right back up as a liquidity grab. And then here is really where I'm going to be looking for my entry confirmations. So same thing that we did on GJ, for example, where I would want to see a bullish candle close into this area, and then the next candle giving me a bottom wick rejection or some form of break and retest in this yellow zone that I've made, and then a continuation up, just so I can place my stop loss below these areas, and then ultimately come back and target the 1775 mark and take partials along the way, of course. Drop down to the 1 hour time frame. So same thing here, where we have created these higher highs and higher lows, as you guys can see. So let's see if we can see a nice break and retest here, and then a continuation down. Same thing, take partials here and let your runners come into the zone. Or is price going to hold on to a support and then a continuation back up from here? So this is why it's important to wait for your confirmations, because right now, as you can see, price is showing you a bullish structure here. Any questions about gold before we go ahead and move on to US30?
All good.
No questions.
Perfect. Let's take a look at US30 quarterly time frame. Insanely bullish here as well. Price came up and held on to a support right into this area. I'm going to adjust this right here. And as you can see, where we've tapped into that area, rejected that, came back down, and we are holding onto a quarterly support right into this level. And that is at 30,700 mark. Let's drop down to the monthly time frame. So on the monthly time frame, we've had a nice bullish volume right here from 2020, coming back up, exhausted out at these all-time highs. Last month made a top wick, came back down, closed bearish. This month we already made a bottom wick rejection, and now it seems like we're pushing right back up. I do believe that a lot of this has to do with, again, that market sentiment leading into interest rate hikes. And so we could probably see more continued hikes here on US30 leading into, again, the interest rates that will be coming out. And this week, you do have a lot of fundamentals coming out. You got the CPI, you got the PPI and all that stuff, retail sales, consumer sentiment. With all of that taken into consideration, this week, we could probably see a little bit of a push right back up coming into these previous resistance areas that can be taken advantage of right here. At 32,900 mark or even 33,000 mark, either of those is perfectly fine. Come back, retest into those areas, and then I want to see if price is going to continue pushing back up. You could let runners go, but as of right now, I think we have enough bullish volume to take advantage of. When you come onto lower time frames, so when you come onto a weekly time frame, again, you are still in that bearish structure from higher time frames. But same thing here, where we've had this low being created, price consolidated out here for some time. And then you got this liquidity grab from this wick and then push back up. The candle closed bullish. The next one gave you a bottom wick, and it was pretty much a straight shot coming back into another area of liquidity. Right. And so what I want to see is, can we come back and retest into this 33,000 mark, maybe a little bit higher, create some sort of a top wick as it has previously, and then continue back down bearish from there. So maybe another top wick here, and then continue right back down bearish from there. I do believe we are going to continue pushing down bearish on the higher time frame structure. Still going to respect that until we get, very optimistic fundamentals and market sentiment pretty much coming out. And right now we don't have anything like that for the long term. All of this is pretty much short-lived. When we come down to the daily time frame, that gets further confirmed, right? Where you get a lot of these sell-offs pretty much happening after price taps into this zone. You get a nice sell-off, price comes back, rejects into this area, another nice sell-off, and that's where you created that last low. We come back and reject into that area once again, where we try to continue bullish, but we fail to do that. Come right back down, but we're still holding on to some of these intraday, I would call that, highs, lower highs that are being formed, and then, higher lows that are being formed, and then prices continuing back up. Make sense?
Got it.
Yes.
So now here, if you want to take advantage of this, how would you do that? So now you got to narrow in your zones, right? And then that is where you're going to hold on to when you look to the left, see how all of that was consolidation support. So this is where you're going to mark this off, and that's going to be your, I'm just going to leave it at this price level here. And if price continues pushing bullish, then you got that buy opportunity coming into that 32,900, even 33,000 mark. And then are we going to end up creating a top wick and again pushing right back down from there? Or can we come back and tap into this area once again? So as of right now, you want to be very careful because you are tapping into this previous consolidation area. When you come onto the 4-hour time frame, you start to see that there's a little bit of resistance being formed. On the previous candles, you could see these signs of exhaustion where price gave you a nice break and retest. Try to continue bullish from here, just left a top wick. The following candle made a bottom wick close at the high of its range, but failed to continue breaking the previous highs or even fill that wick. And then after that, the 4-hour candle closed bearish with very little volume. The current 4-hour candle just started forming. And so, just about an hour and a half ago. So what I want to see is, can we continue pushing down? I'm going to narrow in the zone even more and say that any sell opportunities, which would be like scalps or even like, quick day trade opportunities or anything like that, would be below this zone. So if price can continue breaking below this, then we can come back and target some of these minor areas as partials. Drop down to the hourly time frame. And you start to see how price is holding onto all of this as resistance, and then you have some consolidation forming here. So that's why wait for the low here to be broken, and then target some of these minor areas as partials, and then a continuation down. If price just ends up consolidating here and then continuing to push back up bullish, then you have all these buy opportunities. I would highly suggest if you're trading US30, then just wait for the US session tomorrow. I would not be trading this in London session or even Asian session. With that being said, any other questions on the fundamentals or even the technical side that we went over right now?
No, everything sounded good.
Perfect. So I will see you guys tomorrow morning for our live session. Enjoy the rest of your sessions, whichever session that you guys are trading.